Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, we will try to understand where we have the highest probabilities for a potential move on this pair. And the way in which we will be doing that is first, analyzing the pair from a technical perspective. Then we will go and see what we have when it comes to the commitment of traders, which is what hedge funds and the non-commercials, so the biggest speculators in the market, are doing. So without wasting any more time, let's go straight to the charts. In today's video, I want to speak about gold because at the moment we definitely have very interesting price action. So let's get going. Starting here on the monthly, what we can see is that the market is currently testing a very strong area of previous monthly resistance, which has now turned support and demand. Now, this is exactly the previous all-time high for gold before all this correction. And we can see how last month we did get a close above the zone. So this previous resistance is now turned support, and that is why a potential rejection higher is definitely possible. Now, zooming in, we can also see how this candle here is a candle with a very long wick and a green body. Now, usually when you see a candle like this with a long wick and a green body, you expect the next candle to fill in the wick. So here on the monthly, everything seems pretty bullish and we can expect more potential continuation to the upside. Dropping down on the weekly, what do we see now here on the weekly? We can see how the market is currently testing previous weekly resistance, which is now turned support here. As we're testing previous resistance turned support, we do expect a potential rejection higher. Now, in general, if you have an impulse and you want to measure the potential correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how we have the 0.786, which is lining up perfectly with this previous resistance turn support, which at the moment is holding the market quite precisely. And we do expect a potential rejection higher away from this area. Dropping down on the daily, what do we see? Now here on the daily time frame, we can see how at the moment the market is creating a potential accumulation zone. In fact, we see the sideways price action, which is usually linked with an accumulation going on, from which a rejection to the upside seems possible, considering that already from the monthly and weekly, everything seemed pretty bullish. If we have to identify the high of this accumulation, it would be this one here, which at the moment is acting as resistance, but if the market manages to break it to the upside, that previous resistance would be turned support. And after a break on the retest of the previous resistance turned support, we could expect a rejection higher. So it's very important to wait for the market to actually break above this resistance. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market, are doing, and we check the data for gold, what we can see is that lately net positions have been increased. We went from having 172k net positions up to having 257k net positions with 327k longs compared to only 70k shorts. So gold at the moment is getting pretty bullish. Now, switching back to the chart, if the market will manage to successfully break above this resistance after a break on the retest of this previous resistance turn support, this is the zone inside of which we could be looking for a potential longing opportunity. Now, how we would be approaching that? As usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, if we get a successful break above this resistance after a break on the retest, inside of here, we could be monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from a bearish environment, as we would have, to an intraday bullish environment. And if the market would shift from an intraday bearish to a bullish environment, and provide to us one of our valid entries, at that point we could be looking for a potential long with a good risk to reward and good probabilities at that point for this potential continuation to the upside. Now, if you don't know what I'm speaking about when I say market environment shift and valid entries, that is all part of the mentorship program, which you can now access completely for free. In fact, the link is in the description, and I really suggest that you go and check it out because you can learn all the rules of the strategies and you will find a lot of valuable content inside of it. Now, if you enjoyed this video, also make sure you smash that like button and comment below. It really does support the creation of more free education analysis for all of you because obviously it helps with the YouTube algorithm, and I will see you in my next video.